Brought to you by IOCO, Africa's leading integrated technology services company.
And for today's Tech Talk, we shift focus to the continent at large, where the Nigerian Communications Commission has approved an increase in mobile service prices, the first in over a decade. The hike tops out at half of the 100% that mobile providers had been lobbying for in a 6-year-long campaign, and comes as the nation grapples with inflation and a historic currency devaluation. Business Day's business writer Mudiwa Gavaza joins us now to unpack what the hike means for Nigerian consumers and its mobile operators. Thank you so much for your time, Mudiwa. Firstly, let's talk about the fight for these tariff hikes. What were the major reasons for there being no changes made for 11 years?
So you have to remember that within the context of things that have been happening in Nigeria, a lot of things, I remember that in economic theory, there's a term that's used sometimes called, ceteris paribus, which basically means all things held equal or constant, right? And it seems that a lot of things had been held or frozen in the Nigerian economy for quite some time, including the exchange rate, which was, almost pegged and, controlled by the central bank. You had tariffs that were, kept at, the rate that they were. You also had, some controls around fuel prices, that type of thing. So there's a lot of liberalization that's been happening in the Nigerian economy. And one of the things that hadn't happened yet is an increase in mobile tariffs, as a way to, make sure that consumers are able to, connect and that type of thing. But operators increasingly frustrated that, there's this ceiling that they can't seem to break through, and especially it becomes important when your local currency, which is the naira, crashes by over 90%. Now it becomes even more pertinent. Yes, these guys had been asking for these tariff increases for a long time, but you can see that the drumbeat became even louder, after the liberalization of the currency, because now you're looking for any way to either reduce costs or to increase your revenue. And this is one of the ways in which operators had been hoping that they can, increase revenue. Obviously, this is half because you're trying to balance, right? The operators need to be sustainable and to invest, but we need to somehow be able to protect consumers at the same time.
I was actually going to ask that because, obviously they now approved this 50% tariff hike when the telcos had applied for 100%. And I actually just, wanted to know if the telcos were asking for too much, or maybe just this 100% tariff hike application was just a signal of the frustration that they have had on that front. And if this maybe is a signal of a frustration that could continue, where we could go for a long time with no changes being made on that front.
I want to draw a parallel to something that's happening in South Africa. These two things are not equal, but I think some of the principles apply. South Africa is gearing up for what is going to be probably a big increase in electricity tariffs, this year. And when you talk to people in the energy sector, you can almost see that this was going to come at some point, because year in, year out, the national utility asks for increases of a certain percentage. They don't get that percentage, and then but your costs keep rising, and then periodically you review these things upwards. At some point the market has to correct itself, and then you have this big shock, which is what is anticipated with electricity prices in South Africa. You can control things for so long, right? And in the same way in Nigeria, when it comes to your mobile tariffs, right? In 100% feels like a lot, because the consumer is going to get hit one time by this increase.
But it had accumulated.
Yes, it had accumulated because if they had been doing it perhaps slowly,
Yeah.
right, the chances are we could have even been have reached, that 100%, if not beyond that point by now, by doing it, incrementally. So at some point, like I said, the market has to correct itself.
Yeah.
And unfortunately, right now, the people that are going to be at pains are going to be the Nigerian consumers who are already under a lot of strain because fuel prices have done, crazy things. Inflation is also doing crazy things. This adds to inflation once again. And then I think the last point is the fact that you almost have a vicious cycle that's been happening in Nigeria. You're not increasing your tariffs, but people are demanding more telecom services. They're consuming more data. They're online more. You've got 205 million telecom subscribers from the numbers that I've seen. That's over 90% of the population that is consuming these services. But there's no incentive to be investing in the infrastructure and the networks and that
Yeah.
type of thing. So one of the pushbacks from consumers is, hey guys, why are we having prices increased
Okay.
if our quality of service isn't that good?
Yeah.
But on the other side of that same equation, it's, well, we haven't been getting our price increases. So when it comes to us as telecoms operators, investing in the networks, in fiber, in 3G, 4G, 5G, whatever it is, we haven't been able to do as much of that as we would have wanted. So it becomes this very vicious cycle that's happening.
Well, actually, talking about that investment, it seems that the government is willing to meet the mobile operators. I don't know if it's halfway or at some point in the journey. Yes, my pen landed on where the government is willing to meet the mobile operators. But I'm just wondering what that will look like and if this is a significant enough effort to actually boost, infrastructure in that.
Well, the government has, said that they're going to come to the table because they do understand that you need to be investing in your telecoms infrastructure. People will remember that a couple of years ago, before the Competition Commission stepped in South Africa, that part of the rationale for some of the high data prices was the fact that Vodacom, MTN, and others were spending so much money on capex in South Africa, over 10 billion rand. At the time they didn't have spectrum. All of these issues. So now government is understanding in Nigeria that we need the infrastructure investment, but if we leave it purely in private sector hands, then chances are you're going to have those costs being transmitted back to the consumer, and that compounds the tariff increase that we're having now. So let's rather step in and invest in some of our own infrastructure as a way to sort of help that situation. Once again, you can draw some parallels with South Africa. You have a lot of broadband projects that are happening at provincial level, locally, your free Wi-Fi hotspots in many communities, all of those different projects that are being done by the government as a way to help consumers to absorb some of the costs. So that's the same rationale with the Nigerian government. The only problem is the 90,000 kilometers plus that they're investing in.
Yeah.
That's no laughing matter. That is serious investment that they're putting down. But like anything else in the economy, it takes time for that investment to then translate to some type of a cost saving on the side of the consumer.
All right. Well, thank you so much for your time, Mudiwa. A very hot conversation to the point where my pen fell. Thank you so much for your time and for your insights there. That was Mudiwa Gavaza, business writer for Business Day.
Brought to you by Ayoko, Africa's leading integrated technology services company.